Good morning. This is a quick video to show you how to set up the Jay Spreads in the Thinkorswim platform. The Jay Wednesday special spreads because Ron requested it. So here we go. I've got on the screen that my Thinkorswim account is open. This is kind of Thinkorswim out of the box. What I get when I open up my screen. If you're familiar with Thinkorswim, they've got these various tabs up on the top. What we're interested in getting to is the Analyze tab. And when I click on Analyze, it defaults into the risk profile. And the risk profile is Thinkorswim speak for that graph that we're after to look at to keep track of our trade. Let's familiarize ourselves with the various elements on the screen, and then we'll put the trade on, and I'll show you just how simple that is. The first thing to look at is the symbol. Is you set the SPX. In my world, I've got I've got everything all coordinated with these little yellow boxes. So whatever I click on in my watch lists show up over here because they've been linked together. We're interested in SPX, so there's the SPX. What shows up, and I'm going to click on a couple little boxes just so we have something to look at here. What shows up is dependent on how you want to view the graph, and you can adjust the graph view with these boxes here. What I've defaulted to is what they refer to as the expiration +1. And that doesn't mean an expiration date +1. What that means is it's going to show the expiration graph, which is the red line, and then the +1 will show you it means +1. It means your current position is, and that shows up in this graph as the white line. So in options speak, and we happen to be looking at an MCTO spread here. It's the current SPX 1710 1700. Bull put spread, and as you can see, it's got a little bit of time decay left to go till it gets to its expiration profile, which is the red line. It's literally just that simple. The left hand scale is the dollars, and what they're showing is the value of the dollars or the value of the investment at a given time. And the bottom scale is the actual what the equity is actually at. You can adjust those scales by what I'm doing is I'm holding the left click button down and moving left to right. If I move to the right, I expand the scale, and then by coming back up into the screen, left click and hold, I can then pull the screen back to get it to a relevant point. Or I can go back down here, I'm left click and hold, and now I'm moving it to the right, so I'm decreasing the scale, or zooming out, I guess would be the phrase. And then if I go back there, so by left clicking and holding and sliding around, you can adjust how the graph looks and what it's looking at. The next element to look at is is what they refer to as price slices. And typically what the price slices do is, and we'll do this -10, the price slices show up on your graph as these little red lines. And basically it's exactly what you'd expect from from the name. It shows what the value is of the investment at that particular price. You've got some options. You can look at dollars, you can look at percentages, you can look at whatever that is. Normally, I'll set those up so that I've got a price slice at a -10 below, and a price slice at a +10% above. And in the world of MCTO, that doesn't have much meaning because 10% is a pretty big move. So if you move it down to 5 or even 3, you'll get a better feel for where those prices actually come in at. Oops, and let's adjust this one down to 3 as well. So those price slices are reflected here by the little red lines. And what we're looking at is in this case, is we've got the current value of the SPS is at 1792. I'm showing it floating at 0, so that's giving me my real-time data. That translates to this red line here. and you'll see the 1792, and you'll see as that floats up and down a little bit. It gives you your Greeks on that, but it also gives you, and this is the important part for us right now, is your profit and loss on your position, which is reflected by what's checked down here on the day, and the profit and loss on the position as what they refer to as the open position. So that's your length of time. So what that's telling me is that on my MCTO 1700 1710 put spread, I'm pretty much a wash. I'm at $0 gained on the day, haven't lost anything, and my overall position is I'm standing at a positive $542.59. If I hold my cursor over the screen, I'm going to point. If you come over here and look over here at the left, you'll see there's a red number and a white number, and those translate to what the price is at wherever it is my cursor is. So as I move my cursor left and move the investment down, you can see that the actual my PL open, those are actually your open prices, is I'm currently at, if the SPX were to drop to 1770, where it's at right now, my investment would drop to I'd be at a loss of about a minus $930. I'm moving it ever so slightly. However, if I held it into expiration, I would make $2,015 on that spread, and that's really all there is to it. Now, the third element of the page to look at is what I've just been fooling with these little check boxes. MCT or TOS will default if I have a position in a particular equity. When I pull that equity up, SPX in this case up, it will automatically load those positions in, so that I've got the option of looking at what my current standings are, and I can do that with these little check boxes. Simply, I can turn them on and turn them off. So since I have existing MCTO spreads in the SPX, I've got 2 bull put spreads. With the graph, by having all 4 of these checked, I'm now looking at how those are actually performing with my real-time data and where they're actually at. And as you can see, so the 2 of them, I don't have much to worry about until I get back to about 1735, which falls in suit perfectly with the put spread. All right, so there we go. So hopefully you've got a sense of what we're looking at on the screen, which is what I wanted to accomplish. I'm going to uncheck these MCTO spreads. So now we've got a blank SPX, and what I've told TOS to do is graph out nothing with the SPX. So all I have is I've got a price slice plus or minus 3% on the live SPX trade. Okay, and that SPX trade is trading right now miraculously at 1793. So for the J spread, if I think I've got a downward bias on SPX, so I want to put a J spread on, and let's pretend we're at the end of the day. The J Wednesday special spread on and we're going to use 1790 as our point. How would I do that? I do that by adding what they call simulated trades. And so I go to this tab up here and click on Add Simulated Trades. The graph disappears and up pops the option chains. In this case, we're interested in the first week of December, and I've had those pre-opened because I've obviously fooled with this. I've got the December, we're in the weeklies here, and so I want my first week of December, and I'm going to scroll down. By the way, I've got my strike price set at all, and you've got some options here. If we set it at 14, we'll get far less options that'll show up. But I kind of like the all. I've defaulted to that as my default, so we get a lot of spreads. So I've got to do a little navigating. But my strike price is the SPS seems to be going up. I'm at 1795. I'm going to make a decision, and my decision is going to be I'm putting it on at 1790. Now the J spreads is a bull put spread, 10 of those, and with a back ratio next week long put at a half, so only 5 of those. So how do I put those on and get those onto the graph? I hover over my 1790 put, I right click on it, and I'm going to sell, because it's a credit spread, a vertical based on 1790. When I do that, up pops this little window down here that says, hey, here you go, here's your spread. Now, and it's a bull put spread, so it's a credit, which shows up over here. Now I've got 10 of those, so I don't have to adjust this. By default is 10 trades, and so that's perfect. The 1790 for the short leg is perfect, but the 1785 for the long leg is not what I'm looking for. If at 1790, I need to put on a spread at 1765, and that gets me. That's my J 5 strike points away point in this case. 5 strike points in the SPX translates to 25 units, so 1790 minus 25 is 1765. There, that's my credit spread, and it's currently trading at approximately 445, or at least that's the starting point. The next element I want to put on is I want to buy the long put, which I go to the December 2nd weekly, scroll down to 1790. I right click on that, and I'm going to buy a single option by clicking on that. And now this brings up the single 1790, but I've got 10, which again is my default, and I need to reduce that to 5. So it's, at current pricing, what it's telling me is I'll get a credit of $4.35 for the 10 spreads. So I'm going to get a credit of roughly, and it keeps dropping, roughly $4,200. And it's going to cost me roughly whatever half of that is, about $5,500. So I'm not going to be exactly in balance. So it's going to actually cost me some money. So I need some cash in my account to make sure I've got the money to complete the trade. I've now put, as far as Thinkorswim is concerned, I've now put those on. So now let's go look at those. And you can see the little check boxes are there. So we go back to the risk profile. Boom. There it is. There's my J spread risk profile. I can track it in the center court here. This gives me my real-time pricing ramifications to having that spread. Now, if you put the trade on in Thinkorswim, it won't be in these cute little colored boxes. It'll translate up into these like white colored boxes where that shows that those are your actual positions, and you can use your check boxes to exclusively show those or whatnot. By check boxes, I mean these elements over here. However, if I'm putting these trades on in Options Express, what I would do is I would let this float real live, just as I've done here, and this allows me to track the investment. As the market moves on us, and we've got a perfect example of that we haven't bought this trade yet. We haven't actually executed this trade. So I'm watching the market go up, and I'm saying, well, you know what? Maybe I don't want to put on the 1790 spread. Maybe the 1795 spread is the right thing to do. Really simple. I just click on that, left click on that, and I just change my assumptions. So I'm going to move everything up 5 cents. And boom. So now I've converted my graph from being, I'm going to move this thing over a little bit. I've now converted my graph from being the 1790, 1770 bull put spread to the 1795. And it's just that easy. It's looking a little better. So that's how I'm making the adjustments in Thinkorswim. All fine and well. Let's say we lock onto this, and let's say we then jump over to our Options Express account and execute the trade. Well, I may execute the trade at these dollar values, or I may not. And as we well know, executing spreads can be a little challenging. So let's say I don't get my $5.45 for the spread. What I really get is $5.15 for the spread, and it cost me, instead of $13.20, I'm actually going to spend $13.40 for the puts. Coming back into Thinkorswim, I would then do just what I just did by clicking around, clicking the right numbers into place. And what you'll find is this little lock thing has now changed to a red instead of a green. Now I've locked that price in, and now I'm tracking the investment on this center line price, on the center price at those dollar values, if that makes some sense. So now I've got a real-time thinkorswim risk profile, what's happening to that investment. And so as at the SPX, and as long as the center price slice is set to float, it will keep reflecting where I'm actually at price-wise. So it's telling me if I did that trade, I'd be down $550, etc. What's interesting to watch is as the trade goes on over time, and sometimes very short time, what happens to the white line is it approaches and becomes, the time decay takes effect. That white line will start to get closer to the red line. Just for hoots, I'm going to show you how you do that. How you look at. I'm going to use a day step now. I'm going to use a day step of 3 because I've got 3 days to go. So now, and then I'm going to adjust my day step down to 1. And now what we're looking at is, you look at the little box over here, you're looking at the price slices on given dates. So this little investment blows up. The actual date of expiration we'll say is 12/7, which represents the yellow line, which is exactly what the red line would look like, the ultimate expiration. But you can see the red line represents theoretically what the investment would look like tomorrow. Excuse me, yes, tomorrow. The white line represents today, the red line represents tomorrow, and the orange line represents the time decay associated with where the trade would be at on Friday if the equity was at whatever equity price I want to be at. So you have an opportunity, so to speak, to actually see the effect of the time decay on the investment. That is why on the Jay Spreads, as you move the time slice around, you'll really see that although we've got an ultimate price of maybe $3,000 that we could make, since we're not going to be in this investment through expiration, we'll never get there. That's why as I float this thing around, and if you look at the orange price and the red price, you'll see that the reality is this thing pays off somewhere around $1,000. Well, there you go. Have fun with it. Enjoy yourself. And that's how we do the Thinkorswim. Let me know if you have any questions.